with a market value of more than $840 billion at the time of this video. Tesla is among the biggest automakers in the world by market capitalization. General Motors is valued at $56.9 billion, whereas Ford is valued at $60.9 billion. Which of these businesses is most likely to rule the EV market going forward? Welcome back to Everything Tesla Facts, everyone. One well-known reality is that the emergence of new electric vehicle manufacturers has caused Tesla to lose some of its market share. But a lot of people would contend that it still controls most of these markets. That may be the case, but Tesla's genuine domination hinges on its ability to surpass all other automakers in the market. Ford and GM, Tesla's two main rivals, have made significant investments in the production of electric vehicles in recent years. The focus for the majority of investors will be if Tesla truly makes significantly more money than these automakers, even though the company has exceeded many of the market's forecasts. But is it true? Let's investigate. But before we delve into the specifics, remember to like, subscribe, and turn on the notification bell so you can be informed about everything that's happening with Tesla. Well, let's get started right away. Researchers at Bloomberg NEF predict that by 2025, the number of electric cars sold annually would have increased to 20.6 million. Given the typical cost of an EV, manufacturers of electric vehicles have a potential revenue opportunity of around trillions of dollars. Tesla has spearheaded the EV revolution over the last 10 years and is the market leader in numerous significant international markets. In 2021, the automaker delivered 936,000 automobiles, and it has been expanding its production capacity at a rapid pace. Conversely, Ford is a legacy car maker that still sells most of its vehicles with internal combustion engines, or ICE. Ford intends to make a $50 billion capital commitment to EV operations in order to increase EV production between now and 2026. To reach this milestone, the carmaker also has a range of electric vehicles, such as the F-150 Lightning and the Mustang Mach-E. Even though General Motors posted strong year-end financial results in 2021, in spite of manufacturing problems, none of major automakers appear prepared to abandon their efforts to control the EV market. However, there can only be one top EV manufacturer. Is that business actually Tesla? To find out, keep watching. Tesla recorded $53.8 billion in revenue and $6.5 billion in operating profitability in 2021. The majority of investors anticipate that Tesla will receive a sizable portion of the anticipated yearly EV sales, which will boost its yearly revenue, not to mention Tesla's battery, solar, and self-driving technology divisions. However, Tesla is not alone in its efforts to boost EV sales. By next year, Ford wants to increase its yearly EV production capacity to 600,000, and by 2026, it wants to reach 2 million. The automaker may earn up to $100 billion in 2026 from EV sales if this is successful. Ford may have the chance to reach that goal, even if it is uncertain if it will be able to produce as many cars in that time. With cash and equivalents of over $29 billion, Ford's market capitalization has risen to nearly $54 billion in the last several months. This, however, is insignificant in comparison to Tesla's market capitalization of over $800 billion, which is among the highest in the world. Ford will need to have a market valuation of at least $270 billion in order to overtake Tesla in the future. And this may take years. Similarly, General Motors, Tesla's rival based in the United States, intends to invest $35 billion in the development of electric vehicles and self-driving cars by 2025. Putting the company on track to sell entirely electric vehicles by 2035. In the second quarter of this year, the business sold 578,639 vehicles. The automaker outperformed the market, which led to a surge in its shares, despite a 21% decline in industry sales overall, even though its sales were 15% lower than the previous year. In addition, GM CEO Mary Barra stated that the business intends to surpass Tesla by 2025 and sell the most electric cars in the US, but doing this will need a lot of work. The CEO claims that GM plans to surpass Tesla in 2.5 years by offering higher-range electric vehicles at competitive costs. Given that Tesla has raised the price of its electric vehicles, this may appear ambitious and even unachievable to most consumers. If we look at this, however, we can see that Tesla is quite popular in the EV industry, and that the majority of individuals who purchase electric cars do so not just because they want an electric car, but also because they want to own a Tesla. Therefore, it will be extremely difficult for Tesla to lose the US market to GM or any other EV manufacturer. The supply chain problems that continue to impact the performance of all the main manufacturers have been a major obstacle for the EV market as a whole in recent years. But it's clear that Tesla is handling these difficulties more skillfully. In the second quarter of this year, the carmaker delivered 305,407 automobiles, while maintaining a rather flat sequential production level. Ford, on the other hand, saw a 17.1% year-over-year decline in vehicle sales in the first quarter, and its top line suffered sharply as a result of the decline in U.S. car sales during the previous 2 years. Even while overall car sales have decreased, EV sales in the U.S. are still increasing, and Tesla controls a bigger share of this market. With a 68% market share, Tesla continues to dominate the U.S. EV industry, which it has done for years. The U.S. EV market is still heavily reliant on Tesla's manufacturing and delivery, even though its share has undoubtedly declined as new EVs have entered the market. This is not the first time that Tesla has outperformed its rivals in handling a supply chain crisis. Despite fewer car deliveries, the automaker reported higher revenue. With approximately 258,000 vehicles produced and 254,000 delivered globally in the second quarter of 2022, Tesla generated $3.31 billion in net profits. In the meantime, despite delivering more automobiles, its competitors made less money. Ford delivered 483,688 new cars to U.S. consumers and earned a net loss of $3.1 billion. Whereas GM delivered 582,401 vehicles in the U.S. alone and generated a net profit of $2.93 billion. It goes without saying that Tesla is doing much better in terms of revenue generation and has the highest profit margin in the sector, both of which are critical for the company to remain in operation. Over the last few quarters, the automaker's revenue has been steadily increasing. In essence, Tesla is far outperforming all other EV manufacturers in terms of net profit. Additionally, Tesla is increasing its sales margins in addition to its revenue. Tesla outperformed both Ford and GM in terms of profit margin over the last 3 quarters. In the second quarter of this year, Tesla posted a net profit of $2.3 billion, surpassing GM's $1.7 billion net profit. Additionally, the automaker generated 3 times as much money as Ford, which declared a $667 million net profit. It's also a known truth that, despite supply chain issues and competition, Tesla will continue to hold the top spot in the EV market. The supply of batteries is the biggest obstacle facing EV manufacturers, and Tesla has worked hard to address this issue by collaborating with the Japanese battery manufacturer Panasonic. Even while Ford and other firms are making major investments to increase EV production, they still have a long way to go before reaching a sizable yearly production target. And by then, Tesla will probably have further solidified its position. To eventually outperform these other automakers, Tesla will need to step up its game, despite its amazing growth potential. It goes without saying that Tesla has gained a lot of bad press as a result of its failure to fulfill the dates for the introduction of several of its projects, such as the Cybertruck. Tesla repeatedly postponed the sale of its pickup truck, and even after many stated dates, the car has not yet been put on the market. Such behavior may negatively impact Tesla's growth prospects and popularity. Similarly, GM, its rival, is exceeding market expectations. Despite the difficult quarter, the automaker once again exceeded analysts' expectations. Even though the majority of analysts predicted a drop in its profitability for the second quarter of this year, GM recorded a total of 95,000 vehicles produced at the end of June, but it was still struggling with supply chain challenges, particularly with its computer chips. Despite a 15% decline in U.S. sales in terms of revenue, production